Hello, good morning, everyone. I want to tell a small story. Let's say somebody has 100 mangoes in a box. He goes to the market, takes out 4 mangoes out of 100, and says, "Hey, I want to sell this 4 mangoes for $40. So one mango is $10, 4 mangoes for $40." And the people in the market says, "Yes, we are going to buy 4 mangoes for $40." So what does that mean? That means that the value of one mango is $10, which means the value of the 100 mangoes in my box is $1,000. Now remember, I have not sold 96 mangoes. I just sold 4 mangoes for $40, which means 4 mangoes is 4% of 100 mangoes. So I sold 4% of my mangoes for $40, and I'm telling everybody the value of the mangoes in my box is going to be 4 multiplied by 25, right? Because for 4% it is $40, so 100% is going to be 40 into 25, it is $1,000. Now, why do I tell you this analogy? Because on Friday, which is tomorrow, SpaceX is coming up with the IPO in the Wall Street. So SpaceX is doing exactly the same thing that this mango seller is doing. SpaceX is saying, I'm going to sell 4% of my shares for $75 billion, and 4% of SpaceX share is 550 million shares. So they're going to sell 550 million shares, $135 per share, I believe, and that is 4% of the total share. So 96% of the shares of SpaceX are still in the box. They are with Elon Musk, private investors, private institutions, and for regular public like you and me, they are releasing 4% of the shares to collect $75 billion. So let's say the public says yes tomorrow, and very likely public is going to say yes, and people are going to buy this 4% of SpaceX shares, and Elon Musk company SpaceX will get $75 billion. So now they can say if 4% of SpaceX was sold for $75 billion, what is the value of 100% of SpaceX? So it is 75 billion multiplied by 25, which is $1.75 trillion. So this is how companies are valued, guys. They sell 4% of the company and they value the 100% of the company. So this 4% in Wall Street terms, it is called float. So whenever you want to buy the share of a company, you first find out what is the float of the company. Float means what percentage of the company is owned by regular people. So in the case of SpaceX, the float is 4%. If you look at Microsoft, Google, Apple, the float is more than 95%, which means 95% of the shares, which means more than 95% of the shares of Apple and Microsoft are owned by public. And in the case of SpaceX, only 4% of the shares are owned by the public. So please remember this when you buy the stock of SpaceX and follow the valuation of SpaceX, because scarcity will increase the value of the company. What will happen when eventually 95% of the SpaceX stocks come into public? So what is going to happen is people who are owning SpaceX stock, sometimes in the future, slowly and slowly, they are going to sell the stock, right? Because they want the money, which means right now 4% of the SpaceX stocks in the market. 1 year later, it might be 10%, and then 15%, and then 20%. Eventually, 90% of the SpaceX stock might be in public, and that would give you the real valuation of the stock. Right now, we are valuing SpaceX at $1.75 trillion based on 4% of stocks that are being sold, just like we are valuing 100 mangoes by selling only 4 mangoes. In the case of Microsoft, the owners and founders only have 10%, 95% are in the public market. So that's the difference. So don't just do some kind of homework, like basic things, before you buy stock of any company. Number one reason you want to, whenever you buy the stock of Reliance Industries or Apple, first thing is check out what the float is of the company. Higher the float, the better, which means there is more liquidity. When more people are owning the stock, lower the float, not good. And there are other things also to consider, like PE ratio and market capitalization and future growth and forward PE, bunch of terms. But at least now you know one term to look for when you buy a company stock. Check the float. Thanks for watching the video. Hope to see you in my next video.